Everyone. Thank you for joining us today. I am Marva Morris, your New Jersey Realtor, and I'm here today with Matt Fischman, who is a mortgage loan officer. Matt, introduce yourself.
Hey Marva, thanks for having me on today. My name is Matt Fischman. I am a mortgage loan officer with Cross Country Mortgage. I've been in the business for 16 years and I am looking forward to sharing some helpful information today that's going to help you in your home buying journey.
Excellent, excellent. So today is an exciting day. I'm only kidding, but we have to tell you about it. Today we're talking about how to read a mortgage quote because you get that information and the only thing that we want to know is the bottom line, pretty much how much do I have to put down and what is my payment going to be. But Matt's going to put up one live for us and he's going to go through the entire process with us and kind of explain to you what that actually means. So Matt,
All right,
whenever
so
you are.
okay, I'm gonna share my screen here and we're gonna dive right in. Um, and by the end of this, you will know how to read a mortgage quote. So just one moment here.
I know I'm excited. What about you guys?
You can put some toothpicks in your eyes if they start to shut. That's my recommendation. All right, so we should have my screen up here. So this is what a mortgage quote looks like. Every lender may use a slightly different format, but this is what we use here at Cross Country Mortgage. Personally, I think it's easy to read. I've seen more complicated ones, but we can just kind of dive right in here. So at the top, you're going to see loan details. You can kind of think of this as a bird's eye view of the overall kind of terms of this quote, so to speak. So this is telling you this is a regular old conventional mortgage. It's 30-year fixed. As of the date that this quote was generated, the rate was 6.49%. APR stands for annual percentage rate. That always calculates out to be a bit higher than what the rate is because mortgages have closing costs and sometimes mortgage insurance. In this example, we used a $310,000 price, did a 5% down payment, which gives you a loan amount that results in $294,500. And then this is for a primary residence, a detached home, meaning that it's freestanding and doesn't share walls with another house. LTV/CLTV stands for loan to value ratio, and combined loan to value ratio, the long and the short of it is that's basically the opposite of your down payment. If you're putting 5% down, you're borrowing the remaining 95%. So in this example, we can hop over to the right hand side and we can see what the monthly payment is. So mortgage payments have a different components to them. So the principal and interest portion of the payment is $1,859 and change. So that means that just the mortgage itself, without anything else, just the loan, is this amount per month. Now you're also going to have hazard insurance. That's just the technical term for homeowners insurance. I used $1,500 per year in this example, which breaks down to $125 per month. And then for the real estate taxes, those are going to vary on each home. This particular example uses $9,500 per year for real estate taxes, and that works out to $791 and change per month. Lastly, you have mortgage insurance. Sometimes that's also referred to as PMI, which means private mortgage insurance. Scales up and down with the loan amount. Also depends on your down payment and your credit score, so it's going to be unique to every situation. But that's another $61 and change. So when you add it all up, your total payment that you would either write a check for or have debited out of your bank account every month would be $2,837 and change for this particular scenario. Obviously, lower price, lower taxes would yield a lower payment. So each house is going to have its own unique payment. All right, so then we can get into the closing cost. So these are paid in addition to the down payment, and there's, again, different components to them. So as we kind of scroll down here, the lender fees, everything that we charge is $1,498. And that's the total fees that we charge as the lender in this situation. Everything else you're going to see is a third party fee, not charged by the lender or bank. Obviously, you want to know what those are going to be because they affect your bottom line. So we can kind of do a quick rundown of those. You're going to need to get the home appraised, $550. If you move forward, the cost of the credit report is passed along to you, $125. Flood certification, we check to see if the house needs flood insurance. Then you have your title fees up here in this section. That's the legal end of things. It's transferring ownership. It's issuing what's called a title insurance policy. It's recording the transfer of ownership, the sale of the home in public records. It's background searches on you as the buyer, on the seller, and on the home. Make sure there's no liens or judgments or any lawsuits that have attached to the house, so that you get a free and clear, clean title and deed to the house when you buy it. Yep. Then you have some optional fees down here. Attorney fee. Technically, you're not required to get a real estate attorney. It is highly recommended. Most people do obtain one. You're looking at approximately $1,500 for that. Survey fee. That's when somebody comes out and surveys the land. So they have one of those kind of tripod devices, and they check where the boundaries of the property are. A lot of times there's very clear maps in the public records that define the property boundaries, and you don't need one. But if you did need a property survey, you're looking at about $500 for that. So on this page one, these are the actual hard costs for services that are being rendered. And you'd be looking at $7,140 in this example. So then we're going to hop over to page two. There are more. They're technically not fees. They're actually paying things in advance of when they're due. They still do affect your bottom line and how much you need at closing. So they're here in this escrow and prepaid section. Few things to point out there. You do have to pay your homeowner's insurance in full for the whole entire year. It's not like auto insurance where you can pay as you go.
Okay.
So we're seeing $1,500 here for that. And then you're also seeing some line items here having to do with additional homeowners insurance and property taxes here and here. So how it works is you may have heard the term called escrow. A lot of people don't know what that is, but what that means is that your taxes and insurance are built into your mortgage payment. Okay. So as you saw on page one, a portion of your payment is allocated towards taxes and insurance. So we actually take that money every month. We put it in a separate account called an escrow account. It's almost like a savings account that we maintain for you. So every month you make a payment, that balance is going up from the payment you made into it. And then when the taxes and the insurance are due in the future, we literally write a check out of that account and we mail it to the tax collector or the homeowner's insurance company on your behalf. So in the months when those are due, the balance of the escrow account is going to drop because we just paid taxes or insurance on your behalf. So to kind of circle it all back, at closing, we have to figure out, okay, here's our closing date. When are the taxes and insurance due again in the future? And then we have to deposit funds into the escrow account at closing. So it starts out with a positive balance. And so there'll be enough money built up in that account by the time the taxes and the insurance are due again in the future. So if you want I know that could be a little confusing, but at the end of the day, this is based on 5 months worth of taxes and 14 months worth of insurance. That's how we came to arrive at these figures. And then you also have something called prepaid interest. So that means you're going to pay all the interest that's going to rack up from the day you close out until the last day of the month. But since you're paid in advance on interest, the benefit to that is you essentially get to skip your first month's payment. So if you closed in, let's say May, there's no payment due June 1st, your first payment's going to be due July 1st because you already paid that interest at closing. So when you add all these up, you end up with $6,610 and change. So if everyone's still with me, we're almost at the end here. Yes, the end is in sight. So just hang with me for a couple more minutes. To put it all together, we have what's called cash to close. So it's the total of your down payment and all these various costs. So 5% of the price, your down payment in this example, where we use 5%, is $15,500. Then we have all those actual hard costs from page one, if you recall, was $7,140. And then all these prepaid and escrow items from page two is $6,610 and change. So when we add all this up, when you go to closing or settlement as it's sometimes called on that day, you would need a check, a cashier's check, in the amount of $29,250 and change, and that would cover your entire out-of-pocket cost to purchase this home in this example. So that's how to read a mortgage quote, and that's your crash course in doing so.
Woo!
Yes.
How are you guys feeling about that, right? But I feel like I know now what it all means. And it's all hard. You get those pieces of paper and you're looking like, what does this all mean? But you want to know at the end of the day what your closing costs are going to be, because it usually takes 45 to 60 days to close once you find the home that you need. So this way, when you get that up front, you're going to know approximately how much money you will need for closing so you can be prepared for that. So thank you, Matt, for all that information.
Yes, you're very welcome. Yeah,
all you math
happy to share it.
Yeah, the math geeks out there, they're all excited, like, whoa, okay, now you're loving it. And the rest of us are thinking, great information to know, but would you want to sit through it again?
Thank God that's over.
Thanks, Matt, again for showing us that today, looking at how to read a mortgage quote. So thank you so much. That was phenomenal. So any last words before we sign off here?
No, just wanted to thank everybody for their time. I'm always available if anyone has any questions, and I hope everyone found that valuable, and y'all have a great rest of your day.
Thank you. So we want to thank you for joining us today, and make sure you look out. We're going to have home buyer seminars. We did a whole series, so if this is your first time watching one of our videos, go back and look for the other ones that we did. We talk about everything regarding the mortgage process and the home sale piece. So hopefully you'll get to catch them, and make sure you put your comments in there and follow us on our different social media platforms. We look forward to seeing you and talking to you in person when we have our home buyer seminar. Have an awesome day. This is Marva Morris, your New Jersey Realtor. Take care.